Hi everyone. Thank you so much who are actually following this channel. Actually, I started from last week to create some content based on my education, my experience from my life and living abroad. And I'm living now in Denmark and working as academia. I am teaching my undergraduate level in finance, banking, accounting related course, and I'm a financially finance professional, and I'm working also 8 years industry experience as accountant, finance, internal controller, related jobs. And right now I'm working as academia, and also I have a two master degree in bachelor in finance, MBA in finance, MS in accounting, auditing, internal control from Sweden, France. So, and also a lot of courses, my master thesis, all are actually related to the finance. So, what I'm wondering, maybe I can share a little bit knowledge about the personal finance. I'm not going to be any complicated topics what actually the people don't need to know, of course, but every professional people, you need to know the personal finance and how to save your money. Your income period is limited, but based on this income period, you have a lot of responsibility. Also, you have to think about your retirement time, your child future also depend on you, also housing, buying, planning for how to live your life in a good shape. So, and also like some unexpected or unexpected situation, you have to also make a plan accordingly. So I'm not going to describe it's a personal finance, it's a broad concept, but if you following the channel, you can get it every content. I'm actually, I got a call and I got some messages, and someone asking for to make a, yesterday I got one of the students asking, please make some video on the literature review or Harper reference system or American reference system. But if I make this video, I don't think it's going to be work for every people. So that's why maybe I can slowly will make, but I have a some common topics to make it. So what is the plan for today? I have a plan for make a the topics on diversify portfolio. What does mean that? First of all, if I make some short note for that, what is the, it is actually most commonly used in the finance profession. It means like don't put all eggs in one basket. What does mean that? It means the basket is falling down from your hand. All the eggs, every egg actually mean as an asset, so all will be the broken. So, and as a theoretical, it says don't put all of your money in one investment. So maybe the asset should not be only in one asset, maybe not in the real estate, not in the stock, not in the gold. So you have to be put the every asset separately. If, I mean, broken one act, I mean, if losing one of the asset value, the other asset will be uh, recovery. You're not going to be bankrupt, you're not going to be financially insolvent. So that's why it's one of the I know it sounds like easy, but in the real life, is quite actually effective to follow this the idea. So so what actually is a so you have to be put your every asset separately. So what is the asset means? Maybe you can have an investment in a stock. You have a there are chances to market crash, then it will be huge loss. It's happened. Some people have that. Or you have some kind of land. Maybe the land price when you bought that is a high, but now it's a lower price. So if you invest all of your money in the share and all of your money in the land, so your money will be losing the value, you losing the money. Or maybe you have all of your money, you just putting in the one business, and some period of the time the business make a money, but after a while, there are another competitor came up, so you business not making the money at the same level what you expect, and you already, so this is the business failure risks. So it's also part of the risk management. So if you be diversify your asset, you are balancing the risks, you reducing the risks to losing your all of your money. I'm not saying if the one of the asset, one of the egg broken, you losing some of your money, but you're not completely not financially disable, financially not insolvent. So that's actually the most important that. So diversify means save money in savings. You have to be some money in the saving. You have to first save the money, the work you're doing daily basis or monthly basis. uh, then you have to put the money, some of the money maybe the FDR, some of the money for the stock, some of the money for gold, some of the money for mutual fund or business. So it should depend on individual preference. You don't have to be choose all asset. It depend on person to person. How much the someone have a knowledge in investment, someone have a knowledge for land, someone have a invest more gold. So that's why you can choose few of the asset and make a diversify. Remember one thing, it's a disclaimer from my side. I'm not a financial or certified financial advisor. Of course, this is just for your knowledge, just for the sharing knowledge with you. Then you can start thinking on that. What I'm saying is it makes sense, is create any value to make a decision in your life. It's completely up to you. So please don't blaming to me. Before make a decision, think, and you have to work behind by yourself. So I already mentioned, you can consider the land as investment. Maybe the sometimes the investment perform good, sometimes its investment perform bad. So you have to have some diverse portfolio. Maybe one investment running on the bad and another investment make a money. So it will be averagely you going to be compound your money. So that's also the main thing I already mentioned. Never keep all the eggs in one basket. And this is the golden rule for investing. What does mean? I already mentioned the egg means every single asset. And you determine the what asset is prefer or what asset is work for you, not for everyone having a same asset working for them. So someone have a passionate to uh, buy a land, someone have a passionate to buying a gold, someone have a passionate for investment in share market. So you have to have some knowledge, but you can be make a diverse asset in your portfolio. The portfolio means the group of the group of or different kind of asset you putting in your basket. That's called as a portfolio. So that's called as a so diversify your portfolio means spreading your money to different investment. Want a bad destroy, if one destroy or if you broken one of the act, you're not going to be destroy your finance, destroy your money. One thing always remember that the income period for any single person is too short, but and so you have to know how to save the money, you have to know how to protect the money, you have to know how to invest the money, and you have to know money make the money for you when you are sleeping. That's actually the one of the most important the crucial point for at this moment to get to know and make a decision what is the good for you. But if you only depend on paycheck to paycheck, only depend on 8 to 5 job, I don't know if you living in Denmark, the country like high tax, there are always systematic controlling your paycheck, and you after paying all of the tax, some people have to pay 55% tax. If you following this channel, I have another video. Please, I will recommend you to check the salary Denmark salary breakdown step by step. You can So 55%. So if you make 100 crown, 55% you have to pay tax. Of course, it's not exactly 50%, but it will be, but still, it's a high tax country. So one of the high tax countries. So if anyone living like the country like Denmark, the country have a high tax paying country. So you have to be little bit critical thinking how to manage your money, because the rest of the money you have to manage for your retired, for your pension period, because of pension period you cannot be increase your money. You cannot be do anything because it's physically not support to you. So what is the real example for middle class investor or like lower or lower class investment? It's like a diversify. I just give you the little bit assumption, then you can make a plan what actually the risk tolerance means, how much the risk you can and take. I mean, you it's like it's like how much you depend on the money you are invest. If you are so depend on that money and this is the one and only earning source, because you're thinking now, not talking about the retired, you have to completely depend the money you make it at the end, but the right now you are not depend, you have a running income, you have a active income, and you don't have to depend on the money you saving. So that time, that's based on that's called actually the risk tolerance. And also another factor I want to mention is how long actually you can invest this money and the money will be compounding for you. One thing, remember the inflation. Inflation every year there are some amount, some percentage of inflation increasing. What is the meaning of inflation? Price of the product is increasing in every yearly 2%, 3%. That's why if you don't expect the product or any service you getting today is as a 5%, right, as a price of 100 crown, you're going to get same price after 20 years, the same price. So it will be increase the price because of the labor cost increase, back because of the material cost increase. All these things you have to think. So because of the inflation, you have to also keep in mind, to money will be compound efficiently and the money will make the money when you are sleeping. Of course, you have to save the money from your active and putting to the passive income. The money will be making passively for you. How do you do that? So it's a depend on geographically how are you sitting. If you're sitting in Denmark, there are no way to make a money from the banks because bank don't give you the any interest rate, positive interest, just too low. I mean, too low, and from this money you have to pay the capital income tax. There are two kind of tax, so it's not. But still, I give you a little bit. You can invest 20% in the 20 to 40%. Is depend on the age, depend on the risk tolerance, depend on how long you can invest in the stock market. Maybe 20% is the goal. 20% you have to keep it for emergency fund, or maybe starting any startup business, or as a beside your job you're doing some other job. So you can make a plan. I give you the idea, I give you the open space, then you can play around that. It's not like anything specific you have to follow that. So I'm not going to be 10 because it's already 15-minute long. So I hope you get the idea what is the asset allocation. This also diversity for me, asset allocation. The asset means every act. Asset means the land, building, property, also stock, bond, fixed deposit in the bank. Is some of the bank paying high interest rate, you can invest. Also some kind of take advantage account. Uh, Also child investment. I have also another video for child investment, you can follow that. Actually, I'm making this video for Denmark. It's a high paid tax country if you living in some other geographic area. But the idea of the concept for the diversified portfolio is the same. Thank you so much. I thank you, and please keep subscribing. Bye. Good morning.
Morning, how are you?